banks around the world are taking decisive actions to deal with the sharp rise in inflation, and this will remain so for the foreseeable future. We expect the Federal Reserve to raise their policy interest rate, the Fed funds rate, by 50 basis points, 0.5% in the June meeting, and follow that up with another 50 basis points increase in the July meeting. So meaning by the time the third quarter is over, we will have seen altogether 175 basis points of interest rate increase in the United States. For a country that basically sets the price of dollar liquidity, these are sharp, substantial increases and will have profound implication for global markets and economies.
Okay, but we see that the U.S. inflation in April is slowing down to 8.3%, which is still high actually, and the GDP in the first quarter of 2022 contracted 1.4% key to key. So could that be a signal that the Fed won't be too hawkish for the rest of the year until early 2023?
Growth numbers and the inflation numbers combine to create a macroeconomic environment so favorable that after these two forthcoming rate hikes, the Fed takes a pause. We still don't think the possibility is very high, though. If you look at U.S. labor market, if you look at retail demand, overall strength of the U.S. economy is still substantial. Yes, there was a technical negative GDP outcome for the first quarter, but on a sequential basis, underlying growth momentum is very strong, and we see that being expressed by the Fed officials in their various speeches in recent weeks. So I don't think the Q1 number or the very latest inflation number would be sufficient to deter the Fed. They have a lot more work to do.
Okay, we'll see that. So back to the country, what about DBS Bank assessment about Indonesian financial market during this year until early 2023, especially the moment of commodity boom, which actually benefits Indonesia a lot?
Exactly. So like the rest of the world, Indonesia has its set of challenges: rising food and fuel inflation, interest rate increase for dollar liquidity. These are problems that everybody is facing, so is Indonesia. But as you just alluded to, there is a very crucial offset. Indonesia is blessed with a lot of commodities. It's an important exporter of coal and natural gas and crude oil, and the earnings from these will offset some of those headwinds coming from higher interest rates and inflation elsewhere in the world. So all in all, 2022 may well be one of those years where Indonesia outperforms the emerging market world, because most of the emerging market economies are net importers of commodities. Indonesia is not one of them. So there is a good window for Indonesia to differentiate itself.
Okay, so we're going to see this through a monetary policy. What is DBS Bank's point of view on Indonesia's central bank's decision to accelerate the minimum statutory reserve from 5 to 6% in June and later 9% in September 2022? So how do you see this will affect to Indonesian economy?
So traditionally, Bank Indonesia has used a mix of policy. Interest rate, macroprudential measures, and broad range of reserve requirement measures all have been deployed by the monetary authorities here to tackle inflation coming from supply side, demand side, or any other sources for that matter. So we expect the same playbook to be pursued in the remainder of 2022. Maybe a few increases in BI policy rate, maybe 25 basis points in the third quarter, another 25 basis points in the fourth quarter, but that is only a part of the strategy to normalize policy and take some excess liquidity away from the system. So reserve requirement hikes, and also if there are any needs to look at other asset markets, maybe they will be addressed through macroprudential measures as opposed to just blunt interest rate increases. So the playbook for Indonesia, same as before, a wide range of tools as opposed to one specific tool.